Did you know that just as you can borrow money from a mortgage lender to buy a house, you can borrow money from your broker to invest in the stock market? I'm Scott Connor, a 30-year veteran trader, and today you'll learn about margin and leverage right here on Virtual Trade. Welcome to Virtual Trade. In this episode, we'll break down the basics of margin accounts and leverage, including the pros and cons of using leverage. Next, we'll look at the thinkorswim platform to determine how buying power works. And finally, new trader Jenny Horne and I will continue the portfolio management process. So take your seats, grab your notebooks, because it's time to investigate margin and leverage. Let's jump into it. Investors sometimes borrow money to buy stocks, bonds, commodities, and other securities. Borrowing money to invest can work well if the returns are greater than the borrowing costs. But things can go wrong if the returns are less. So it's important to be careful. When you hear stories about spectacular blow-ups at fund companies or banks, it's often due to overwhelming losses on investments purchased with borrowed money or over-leveraging. These stories are a cautionary tale about the potential dangers associated with borrowing money to increase investment buying power. Making a small cash deposit relative to the value of an item is like a down payment on a home. If you make a 25% down payment on a $400,000 house, which equals $100,000, you hope the value increases. You wouldn't logically pursue this transaction if you felt the value of the home would diminish by a large amount. Now, should the home increase in value by $100,000, this is a magnifying gain given the initial deposit of $100,000. But the value could go in the opposite direction, resulting in a magnified loss in relation to that initial deposit. Now let's take a closer look at the ins and outs of margin.
In order to borrow money from your broker, you need to be approved for a margin account. A margin account is a brokerage account with a credit line that allows you to borrow funds against collateral in your account to purchase additional investments. In the financial world, this collateral is referred to as a margin requirement. A margin requirement consists of either cash or investments deposited into your account, which then serve as collateral against the loan from your broker. The amount of the margin requirement is less than the buying power it enables. This means if you purchase investments on margin, you're buying a larger dollar amount of investments with a smaller amount of your own money.
So to recap, if you'd like to borrow money from a broker, you must be approved for a margin account. A margin requirement includes cash or securities. When purchasing a security on margin, it enables you to buy a larger quantity with a smaller amount of your own money. Our example earlier was for a house, but for stocks, the initial margin, or Reg T, is 50%. When trading on margin, you need to be careful. Now, let's explore the concept of leverage.
Using a smaller amount of your own money to control a relatively larger amount of investments is known as leverage. The purpose of leverage is to magnify returns on investments. But remember, this can work both ways. Leverage magnifies profits and losses. To better understand how, let's look at an example of an investment purchased on margin. Suppose an investor wants to buy 100 shares of XYZ at $40. The cost of the investment is $4,000. However, she only has $2,000. By using margin, she can boost her purchasing power to the required amount and purchase the shares. The result is that she only spends $2,000 of her own capital to buy the 100 shares, while the rest is borrowed from the broker. Now, let's see what could happen to this investment. If shares of XYZ go up to $50, she'll make $1,000. Because she only paid $2,000 of her own money, she earned a 50% return. Contrast this return with the 25% return she would have earned if she bought XYZ without margin. But what happens if the stock went down? This could trigger a margin call. A margin call is an alert that is generated when a drop in the value of investments causes your collateral to fall below the level of the margin requirement. Suppose our investor's stock plummeted to $20. In this situation, her broker will demand more money so she can bring her collateral back up to the margin requirement. She then needs to either deposit more money or investments into the account or close the stock position. But this may not resolve the deficiency. This is the risk of trading on margin. If the stock price turns against you, you could end up losing your collateral and owing your broker money. That's why it's so important to use margin responsibly and to carefully manage risk when using leverage. There are times when leverage can be applied in a relatively safe manner. For example, some investors might use margin to extend the purchasing power of a diversified portfolio. With this type of portfolio, investors may be able to better manage risk. Just remember to avoid using excessive leverage. If you don't carefully manage risk, you could lose more than your investment, and losses could quickly spiral out of control.
As we wrap up, it's important to remember that purchasing an investment on margin enables you to leverage your account. Now, leverage can work both ways and magnify either profits or losses. And finally, leverage can increase risk, so it must be used with care. Welcome back, and it's time for Tools of the Trade, where each day we look at various tools within TD Ameritrade, thinkorswim, and Mobile Trader. Today we'll be discussing buying power and margin in your thinkorswim account. And our objective here today is to have a better understanding of margin, buying power, and buying power effect. And of course, as we go through the process, we'll continue to get more familiar using the thinkorswim platform. So let's kick things off right by going straight onto the platform, and we'll go into the trade tab. I think the best way to get started here in understanding margin is to look at a live example. So let's go ahead and go to the trade tab, and I'll pick something off of our list. How about Verizon? I'll just left click on Verizon. As you can see, since we are linked with yellow here and yellow here, that whatever I click on just populates right into the trade tab. So let's do this. I'm going to go ahead and click on the ask price, one left click, and of course that will create a buy order. Let me hide the left sidebar just to make our image a little bit bigger here. Now you can see we're buying stock. Let's go ahead and take that quantity up to 100 shares. So we've created a buy order, we have 100 shares, and now we're going to go to the confirm and send button. Remember, we're not sending the order out, we just want to see the information behind the order. So let's take a close look at this as a good starting point on the confirm and send. Number one, what's the first thing that we see on this? Well, let's take a look at the buying power effect. So you can see it says right there $2,400, right? Well, how much is that? Well, remember, we talked about what's called the Reg T or margin requirement that actually helps determine how much money you need to have in your account to hold the stock position. And remember, that requirement is 50% of the value of the stock itself. So we can see here on the order confirmation box, the cost of the trade and the buying power effect demonstrates that for us. So let's hone in a little bit closer and take a quick look here. So you can see the cost of the trade, well, that's easy to calculate. It's 100 shares of Verizon times $49.37 a share. So that equals the cost of $4,937 plus our commission. But look at the buying power effect. It's minus $2,468.75. So that's about half of the value of the stock itself. So in other words, to buy $4,000 worth of stock, I need about half of that in my account to hold that position. That's called the initial or margin or the Reg T margin requirement. Now, what else do we notice on this page? Well, you can see what's called the resulting buying power just below. Now, the resulting buying power is that once I purchase these 100 shares, if I were to purchase them, and the buying power effect kicks in, which is the 2,400, what is my remaining amount? So your resulting buying power are the funds available to buy stocks after you've made the purchase of this particular stock, which in this case is Verizon. Now, the buying power effect, as you can see, is the number that will be changed. That's the amount that will be changed on the buying power effect once we go ahead and purchase the stock. So you can see that the resulting buying power will be $102,687. Now that's the remaining amount that we could use to purchase stock. Now some of that stock obviously would be purchased on margin, and in a minute we'll go into a different part of the platform where you can see exactly how much you have remaining of your original cash and of course the margin available to buy stock. Remember, when we're buying stock on margin, there is a finance charge for that amount, but you'll see exactly shortly how to discern the difference between the two. All right, so that kind of gives us a good idea on the trade page or the order confirmation box where we can see those numbers exactly. So let's talk again, just one more minute. You can see that the buying power effect, half of the value of the cost of the trade, and again, that's reflecting the 50% or Reg T requirement. Now that's the percentage of margin that's provided in the account, of course, by the broker, TD Ameritrade in this case. Now, the resulting buying power, of course, is for stock. And what's important to know that this resulting buying power is available for stocks that you can buy on margin or stocks that are not on margin. There are certain stocks that, most stocks meet the Reg T requirement, and 50% is the amount that you'll need in your account. However, not all stocks fall into that category. There are some exceptions to that rule, the Reg T 50% rule. Sometimes they require more than 50%, and we'll talk a little bit about that as well. So your resulting buying power is for the entire account, and that's important to remember. This resulting buying power number, that's not just for buying this particular stock, that's what's remaining in your account to purchase any other stock. So that 50% margin rate is important in calculating how much money is available. Now, I mentioned other products can have different margin requirements, and that's absolutely true. There are some stocks in unique circumstances that require 100% margin. So in this case, if we bought $4,600 worth of a particular stock, we might need that exact amount of money in cash to be able to do that. Now again, that's an exception, but typically the margin we need is 50%. Now there are some other products other than stocks that have different margin requirements as well. One of those, for example, is options, and we can talk about those. Those have 100% margin. In other words, they are not marginable. You'll always need to have 100% on those. We'll talk about those at a later date, but it just gives you an idea how different products can have different margin requirements. Okay, now let's do this. I'm going to go ahead and close this or delete this trade. And let's get a bigger picture. We'll jump into the Monitor tab now. And in the Monitor tab, we're going to look at our activity and positions. So you can see we're opening up our position statement here. And let's take a quick look at some of the information we can see there that sort of pertains to the margin requirements and buying power for our whole portfolio. Let's jump through here real quick. Number one, you can see the buying power effect of each individual stock over here in the right column. And then, of course, our total buying power, you can see added up at the bottom here, is about 45,400. That's the buying power that's remaining. Now, take a quick look at this number as well. This is the net lick number. Now, what is the net lick? Net lick's an important number because this actually gives us the value of our portfolio right now. In other words, if we were to liquidate or sell all of our stocks, this is how much cash we would get at current market prices. So if we went in and said, listen, we're selling every one of our stocks, our liquidating value, we can see right here, is $90,858 at this particular moment in time. All right? So that's a column that gives you an idea of how the portfolio is doing, if I want to take a quick look. Now, of course, if we want to keep tabs on how Jenny's portfolio is doing as well, we can always look at the P&L for the day, and of course our P&L open. And if we scroll down to the bottom, we can see how that's doing. Our P&L open since we put the portfolio together, is down just a little bit because the market at this particular time has sold off over the last week or two. So you can see our P&L for since we opened the positions is down, and you can see the P&L today, as a matter of fact, because the market is down slightly today as well. So these are important total columns to look at. Now, what I also want to take a quick look at is how do I discern between cash I originally put in my account and any money that I might be borrowing or taking advantage of the margin. Remember, we said if you open your account with $100,000 like we did here for Jenny's account, we can use all $100,000 to purchase stock. Now, we haven't done that. We've purchased about $91,000 worth of stock, so we still have about $8,500 left, somewhere in that range. But let's say we used all $100,000 of Jenny's original deposit to the account. Remember, we can still buy another $100,000 worth of stock on margin. Now, that second $100,000, of course, will be subject to broker loan rates, and we'll have a finance charged with those purchases. Now, how do we find out what that is? Well, let's go to the left sidebar, and this is a great way to check. On our account information, if it's not there, click on the drop down, and you can see right here, cash and sweep vehicle. And you can see right there, it says $8,400. Well, that's how much of our original cash is still remaining in the account. In other words, it's not being used against any stock. So if we bought $8,400 more worth of stock, then we have now used up all of our money, and this cash and sweep number would start going to a negative amount. Because remember, we still have another $100,000 that we could use to buy stock on margin and pay the finance fee. But if we didn't want to pay any finance fee, as long as this cash and sweep number is positive, we're still using our cash, and there won't be any finance charge for that. But again, that doesn't mean we don't have the buying power. We certainly do. And if we look up here, we can see our stock buying power is about 107.7. So in other words, once this 8,000 gets used up, you can see our stock buying power will drop down to about 100,000. And of course, that's double of our original amount. And at that point, our cash and sweep would go negative. So a great way to keep just tabs on where you are on using your money, or if you're at the point where you're actually starting to buy stock on margin. Very important key for those who wonder about that. Now, there are other types of accounts we haven't mentioned called cash accounts, where there really is no margin available. Everything must be paid for in 100%. Oftentimes you'll see those in things like IRA accounts or other specialized accounts. All right, well, that pretty much wraps up our session on understanding margin, buying power, and where to get the information and to know if you are borrowing money or using just your original cash that you used to open the account. Well, that wraps it up. Don't forget, for more information on these tools and other great education, visit the Education Center on tdameritrade.com. Welcome back to Virtual Trade. I'm joined once again by new trader Jenny Horne. Jenny, welcome back.
Thanks, Scott.
Today we're going to have an interesting look into the account itself. So in other words, Jenny, we're going to look at the portfolio and understand a little bit better about what's the net liquidating value of the portfolio, how much cash is there in the account. We'll look at different things like that. So we'll kind of understand sort of the accounting part of the platform. Does that sound reasonable?
I think that's great because I really have no idea how to see how much cash I've lost or gained. So that's really important, I guess.
Right, and also how much cash is available. And then we'll talk, a little bit about, well, if I'm just using my cash, we did refer earlier to margin, the ability to borrow money to purchase beyond the original amount of cash you put in. So we'll show you where to find all of that on the thinkorswim platform.
Great.
Okay, and this is an important part because, like you said, understanding not just the numbers themselves, but what's behind them and what can I do with the account.
Yes,
forward.
like if I can still spend more cash or something like that. It's very important.
Sure. All right, well, to get started on that, it's pretty simple, Jenny. We're on the Monitor tab. So what we're going to do is, we're right now on activity and positions. And of course, you can see the portfolio, Jenny's portfolio that we put together. One quick way to look here to see how things are going is you can go to the P&L open column. Okay. And remember what this means. Profit and loss, P&L, open since we opened those positions.
Okay, so not since the open market today. Just
exactly.
Since, okay, that's important.
Yeah, some people do get confused. Yeah. Since the opened the position. And so if you go down to the very bottom and say, well, how are we doing overall on this particular day? It's looking okay for the portfolio.
Okay, but the parentheses all mean negative, correct?
Yes.
Okay.
And you can see as you go down your list of stocks, some have had, since we opened the position, have in parentheses, have had a loss. Again, now remember, these are all just paper losses, of course, right? It would only be a loss if you actually closed it at current prices.
Right.
So it's just telling you so far from the original price since you opened that position, and you can see the overall totals are still on the positive side.
Right, $1,200 isn't so bad.
So far so good in our paper money portfolio, okay? All right, now to get into some of the deeper numbers, we're gonna go to the account statement, Jenny. So why don't you go ahead and click on that. We're still staying in the Monitor tab. And one of the first things that you'll see up here is cash and sweep. And you can see it's closed right now. You may have to make sure that you open that up to be able to see some of the numbers in the account itself. Now, cash and sweep is an important area to look at details of trades that you've made, any kind of cash that goes in or out of the account, deposits, dividends that are credited to the account, all these things. It's sort of like a ledger of account activity in your
account balance, almost on like your credit card statement or something like that.
Now, one important thing about this when you're looking at the cash and sweep is that choosing the amount of time you want to look back on. Now, the default is 1 day. And that's not much information. So if you just click the drop down, again, you can click here and say, well, let's tell you what, Jenny, we'll just go back 7 days, right? And you can see, all right, that gives me a lot more information. Here's the 7 days we're going back. You can see the cash balances in this account haven't changed because we haven't added any more stocks to the portfolio.
Okay, that's good to know.
Okay, but if you did have, you could see commissions, fees, if a dividend came in, a wire transfer, that would all show up here.
Great.
One easy place to find all that information. Now, there's another number that we want to look at. What is this balance number? All right, well, that balance is a cash balance. Now, as you recall, Jenny, we started the account off with how much? $100,000, right?
I believe so.
Yes, that's what, paper money, of course, right? And then we purchased stocks. Now, how much of that original cash is left? Well, there you go, $8,445.
It's a good amount of money still.
Right, yeah, absolutely. But we put most of it into the stocks in the different sectors. And we
We're
even
not
have
completely dry yet.
No, there is still some room of your original cash. So if you ever want to know what that number is, that balance is a positive balance. So that is your original cash. That's your money. You can use it till it's all gone if you want. And here's the other thing. If you wanted to go and purchase another $100,000 worth of stock, you would be able to do that on what's called margin. But very important, once you go past 8,400 and down to zero, it will start to go negative. So in other words, if you purchased, let's say $10,000 more worth of stock, this would now say minus 10,000.
Okay.
All right, well that $10,000 is actually being borrowed to
Right.
purchase more stock, and that's called purchasing stock on margin.
But this is a good way to see if I do decide to go negative, how much I'm really borrowing, so I don't lose
Exactly.
track of the margin that I'm trading on.
Exactly. And as we've referenced before, if you're borrowing or that money, that number is negative, that shows you how much you're borrowing. Of course, there's a periodic finance fee for that, of course. Okay.
Yeah, that
And of course,
sounds
that'll show
weird.
up right here in your account statement. So that's an important number. Now, what other numbers here are important for us to watch? Well, equities, which is what this portfolio mainly is, you can see them all here. This gives you actually sort of a net liquidating value of your actual, I'm sorry, not liquidating value, it gives you the value of the equities or stocks in your account. So if you add this number, about 9,200, with the cash balance of about 8,400, this is 92,800 and 84, that should come out to right around 100,000
Right, okay, so this is really how much we've already invested.
in terms of equities, right? Exactly. So that gives you an idea of where you stand, how much you have in terms of equities or stocks in the position. Remember, a lot of this information, Jenny, can also be viewed up here under the accounting column. So you can see right here where it says cash and sweep 8,400. All right, so that's another quick way to reference this, even if you're just looking at charts.
Now, is that always there? So that will always be there if I need to check quickly or something?
It will be, unless it's closed. Now, of course, I'll click on account info here and you're not seeing it, but always remember the little sort of triangle will open or close any of those drop downs. All right, so those are the numbers that we're looking at. Those are the important numbers to us. I'm going to take us all the way down to the very bottom where it says account summary. And again, one of the numbers you'll see here is net liquidating value. So if you wanted to know, Jenny, if I were to sell all my stocks and close the portfolio down, how much cash would I have in the account? That tells you basically if you were to sell all the stocks, okay, that's where you'd end up. And that makes sense, Jenny, because remember we started with 100,000. The positions are currently up about 1,300. So 100,000 plus 1,300 is, there's your
Around
number,
that number.
101.3.
So we haven't lost any money yet because we started with 100,000, we're not below that.
Right, exactly. So that shows you, remember when we looked at the activity in positions, we saw this is up about 1,300. Oh, okay, so 100,000 plus the 1,300 in profits. Again, these are paper profits. They're not realized profits yet. But that's how that number comes up on the account statement. Now, one thing to remember, obviously that number shows how much you would have if you liquidated the account, but of course there'd be some charges in there and commissions as well that we'd want to have to deduct from that number.
Okay, so we wouldn't get to take that whole thing, but
Yeah,
pretty
it'd be
much
that
most
minus
of it.
commissions or any
Right.
fees. Exactly.
Okay.
All right, so these are some important things to remember on the account statement. And again, when you get here, make sure you pick the number of days to go back. Now, how far back can you go? Well, again, there's different ways you can do this. You can either put the number of days, or you can go to a specific time. Let's say, Jenny, I just want to go back to all the trades I did last year between June and Christmas, the end of the year. Okay, well, fine. Then just go ahead and put in those dates there, and then it will take you to just all the account activity in your cash and sweep during that time. So you
Wow.
can be very specific about what you're looking at.
So this will keep your history pretty much forever for your cash and sweep.
Yeah, absolutely. Yeah, to be
That's
able to go
awesome.
back there. A couple other things here we've talked about before, order history and trade history, that's fine. But the main numbers we're talking about today are the numbers, the cash that's available still in the account, how much value there is of the stocks that we own, okay? And then finally, what would be our net liquidating value if we were to go ahead and liquidate everything today?
That's great. And I like to see that we're not negative. That's obviously calming to someone that's invested $100,000.
Sure, absolutely. And on this particular day, and of course now, Jenny, remember this number will always go up and down. We just looked at charts and saw how they never go straight up or straight down. They tend
Right.
to go up and down. There's peaks and troughs. So this number will be moving on a daily basis.
So would you advise checking this number often, or do you think it's more with a longer term portfolio, this is something to just check every now and then?
Sure, yeah, you can absolutely keep tabs on it. But let's just say we're spending a lot of time on charts and then trade tabs and things like that. Remember, you can always quickly access this number under the account info. And one thing I'd like to point out here as well, and you can see right there, there's our net lick, is that if you left click on this box, remember, if you're in public and you'd like to hide this and just have your numbers be private, go ahead and click on that little bar right there and let go. And now you can see just little asterisks instead of the actual numbers.
That's nice if you're sharing a computer or if someone's looking over your shoulder or something.
Right, that privacy mode is nice to have if you're out in public and you want to just keep your things, keep things private so no one else can actually see the numbers in your account.
Yeah, that's awesome.
Okay, well those are the important numbers. The last one I think we didn't really talk about is stock buying power. Let's see if that was on our, let's go back to the monitor page. And if we open up the account summary and we look down here, you can see stock buying power. Yeah, so we still have about $109 worth of stock buying power. Now again, most of that would be borrowed money. After we got through about 8,500 of that would be borrowed money. But that shows you how much is available in your account, in a margin account, to go ahead and purchase more stock.
That's a lot of money.
Sure it is.
That's a little frightening.
Okay, well Jenny, that's a little bit of an overview of sort of the accounting part of the thinkorswim platform and a couple easy ways to access those numbers.
That's great. I like to check these kinds of things just to know how the money is doing and the stocks are doing. Sure. So this is going to be very useful for me.
All right. Well, Jenny, that wraps everything up. How'd you like this session? Good?
This is great. Like I said, I didn't really know where to find this information, so this was super helpful.
All right, Jenny. Well, that's great. We'll continue to learn more about the thinkorswim platform as we go, and I'm looking forward to our next session.
Thanks, Scott.
In this episode, we examined the basics of margin accounts and how leverage can work for you or against you. We also explored the thinkorswim platform to determine how buying power works. Then, Jenny and I took a closer look at her account as we continued to learn more about and better navigate her portfolio. I'm Scott Connor, and thanks for watching Virtual Trade.